here, top 100 financial advisor, two-time author, one-time bestseller, and I am excited because the stock market is back. Today we hit a historic level in terms of, losses. So the whole year, not the whole year, but the majority of the year, we had been kind of plagued with the whole COVID-19. The stock market dropped, people panicked, people left the stock market altogether. Let me get rid of this. You guys won't be able to see my face, but you guys can hear me. So we need to talk about that. We'll get into that in just a second. But first, go ahead, hit the share button. Yes, you hit the share button so we can get some more people in here. I have my phone to the left or the right of me, and we're going to go ahead and get started. Now, the other thing is this is buildingbread.com/free class. That's in the background that you can see now. I will be teaching a free class tomorrow. I think I'm teaching 3, maybe 4. No, I think it's 3 classes tomorrow on 3 ways that you can start investing even if you are a beginner, because a lot of people, especially earlier this year, wanted to start investing, wanted to, yes, again, it's like, it is booming. But a lot of people were trying to figure out, like, how do I start investing? Should I invest now? And people were very, very worried. Well, if you knew how to start investing already, you made you some real money. And I mean, in almost anything. Like, I wasn't someone who was big into cruise lines. I was not big into a lot of the other, airline stocks. But even those are up. The Microsofts, and NVIDIAs, the Apples, the things that I've been investing in have all been up. It was hard to lose money if you held out long enough. So I'm, I'm super excited because, one, I told y'all that if you waited things out and you consistently invested, you are going to be okay. So this is what we're going to talk about today. You should see I call it a map, the chart. I'm going to make it a little bigger here. And as you can see, it got it smaller. So this is the S&P 500. And remember, the S&P 500 essentially measures the 500 largest companies in the U.S., companies that you have heard of. So McDonald's, Apple, Microsoft, blah, blah, blah. You've heard of these companies. And what they tell us is just generally how the stock market is doing. We are even. December 31st, 2019, we were at 3230, and we hit that level today. Now, I told you guys, those who were consistent were going to be the ones who made money. Those who were consistent were going to be the ones who are going to profit. Those who, if you sold out, which is what most people did here in mid-March, you lost money, and now you're starting right here at the bottom, and you're trying to get where everybody else is. If you did absolutely nothing, you would have broken even from December. If you did nothing, if you just sat there and like, look, the stock market's dropping, I'm not going to do anything, you would have been all right. But those who, you can go back and watch the videos that I did in February, watch the videos that I did in March, watch the videos that I did in early April. People panicked. And the other thing I can keep telling you guys too is look at how quick this was. It's really from like mid-March, kind of late February to about April. I did a video on this too. This was about 30 to 35 days. That was it. 30 bad days does not ruin the entire rest of the year. Now, I don't know, and I'm not going to guess where the market is going to go from here. It's still an election year. The virus is still not over. I'm not going to predict like we're going to be up by the end of the year. I think we will. I hope that we will, but I'm not going to sit here and just, proclaim that. But I'm going to tell you this. If you bought at this point, and I'm just kind of pointing at random points. If I bought in February, I bought in March, I bought in April, you would have been better off and you would have made money. This is why you should be a long-term investor, because no one knew in mid-March that this was the time to buy. No one knew that because we didn't know how far things were going to go 3 months ago. 3 months ago, it was very, very scary. The NBA said we're not doing nothing no more. Things were canceled. People were on lockdown. People were in, like, it was a scary, scary, scary time. So no one sat here and said, oh, you should buy on March 15th, which is why I keep telling you guys. People have asked me, Should I buy at this point? Should I buy now? Should I wait? No, you should not wait. The question, should you invest now? The answer is always yes. It just depends on what you're investing in. And I've told you guys over and over and over again, whether it's a webinar or email list, it's about having that process. It's about investing consistently. So if I were investing, just like I told you guys with my son and myself, we invest on a quarterly or monthly basis. So December, I'm buying. January, I'm buying. February, I'm buying. March, I'm buying. April, I'm buying. I don't care what's going on. I'm still putting in the same amount of money. I'm still investing in quality stocks and funds. That is the key. That will always be the key. It was the key in 2008. It was the key in 2007. It was the key in 2001. It was the key in 2000. It's the key in 2020. And those who were not afraid and just stayed consistent, the ones, and I told you guys this before, the ones who are consistent in 2020 will be the ones that will be wealthy in 2030 and 2040. It is the exact same message. Now, not every time the stock market drops, it's not always going to come up this fast. I hope that it is, but it is not always going to come up this fast. However, you got to be consistent, because if I zoomed in here and I just told you this is where we are today, you'd be scared. If I just told, and this is what happened in real life. We couldn't tell the future. This is exactly where we were in real life. And as time went on, things started to improve. So you have to zoom out. You have to take a step back and say, what is going to happen over the next, 2 years, 3 years, 4 years, 5 years, and see how you want to compare that. So for example, what works for you may or may not work for other people depending on where you are. But like, I'm not a fan of the airline industry, but if I were going to invest in anything in the airline industry, it's probably going to be Southwest, because I know when I zoom out, I know Southwest had done very, very, very well up until March. And I mean, like the last 5 or 10 years, Southwest was amazing. American Airlines, not so much. So that's what you have to do with everything, is take a step back, relax, because you know that the longer, for most stocks, and I mean like 90 some odd percent, for most stocks, you are going to be okay. You are going to be okay. So make sure that you share this video. I'm going to give you a few tips and a few other ideas here in a second. Make sure you share this video. Make sure you sign up for the free class and relax. And what I should have played the original video from like March. So I'm going to give you 3 tips. Let's pull up the whiteboard here and let's drag this across. And while I'm doing this, you go ahead and hit the share button if you haven't already. All right, so I'm going to give you 3 tips. What is today? Today's the 6th. So 3 tips to invest today. June 2020. Here's what you need to know. All right. Whew. All right. So I'm a newbie, so I need to learn. Yes, perfect. Glad you're here. I specialize in teaching newbies, if you will. My job is to essentially answer a few questions. How do you start? What do you invest in? And like, how do I open my first account? So these are the questions that I primarily answer. As mentioned earlier, if you don't know, my name is Kevin Matthews II, top 100 financial advisor, 2-time author, 1-time bestseller. All right, so number 1 is consistency. And if you also don't know, I'm not great at writing on this whiteboard or spelling. So I'm telling you now. So consistency. Hopefully we spelled that right. If not, oh well. So what this means is no matter what you're putting in, I don't care if it is $10. I don't care if it is $1,000. Whatever it is, it needs to be on a regular basis. So this can be monthly. This can be yearly. Whatever it is, you have to do this. If you don't, you're not going to see the returns you think you're going to see. The mistake that a lot of people make is I put $100 in Nike and they just sit there and just wait for like a month, 2 months, 3 months, and they get upset because they only made $1. That's because that's not how it works. You got to be consistent. My son has done incredibly well with Nike because we put in About $100 a month. It goes straight to Nike. We've been doing it for 18 months or so, and that's where he starts to see those gains. You have to be very, very consistent, regardless of what is going on. So even in January and February, we were still consistent. Didn't matter what was going on. Even in March, I did not change my strategy, not one bit. We know we have data that tells us over, after about 3 years, you have close to an 89% chance, if you hold the stock for 3 years, that the stock is going to make money. Once you move over to 5 years, you're looking at about a 97% chance that that stock is going to make money. This is why I knew that we were going to be okay. If not this year, then at least over the next 3, 4, 5 years, because you're buying companies, and you should buy quality companies, not ones that are on, the brink of distress, and, we don't know whether or not we're going to make it. We pretty much know that the Apples, the Googles, the Netflix, or really Nike more than Netflix, they're going to be all right. All right, so let's go back here. Yeah, I'm all over the place today because I've been preaching for so long that we was going to be all right. And people were just, we're not trying to hear me. All right, so number 2, and those of y'all who've been here the whole time, y'all know what I'm talking about. All right, so number 2 is 3 tips that you need to invest today is quality. At the end of the day, it's going to be quality that wins. You need to invest in stocks that are good. Now, what is good to you? It all depends on what your goals are. Now, I primarily focus on long-term stocks. So stocks that I know and feel that over the next 5, 10, 15 years, they're still going to be here. You could have made an amazing amount of money on Hertz over the last really 2 weeks. I don't know if Hertz is going to be around forever. I also don't know how well Hertz has been over the last 5 years. I don't know that. So that these are things that you would need to reconcile and figure out on your own. However, I know what I would prefer to do is not worry about what's going to happen tomorrow. I'm never going to wake up, at least, in the near future, and see Apple on the brink of bankruptcy. You're not going to see that. You're not going to see that no time soon, right? Same thing with a Disney. Same thing with an Amazon, at least right now. That's my preferred method of investing. You can, make a whole bunch of money overnight if you want to in Hertz. And that's fine for certain types of people. It's just not for everybody. So you want to invest in quality. We talked about these stocks before, and I'm trying to recall them. And these are not for everybody. These are just general ideas. Microsoft. And these are ticker symbols. I've been talking about Costco for quite some time. Dollar General, it's pretty good. It's another one that I like. Nvidia, Amazon, obviously. There's one more that's coming on top of my EA Sports is actually pretty good too. And AMT is a REIT that I like. So these are just ones that I like. Again, what do they work for you is a question that you need to answer. How do you figure out which one of these 1, 2, 3, 4, 5, 6, 7 work for you, or do none of them work for you? Sign up for the course. It's free. Check that out. All right, so that's 2 of them, and then I'll give you a third one before I start to answer questions. Is stay calm. Stay calm. It's I should have really wrote that in red. The reason is you can have some of the best investments in the world, but if you don't stay calm and you panic when things are like this, when things don't go well, you're going to lose that money. There are people, in fact, Apple was one of the first major stocks to fall, and so was Nike. The reason why is because they had so much of their business in China. I could have sold out of Nike and sold out of Apple and lost the money and started here at the bottom. but you did not have to do that. I did not have to do that because I stayed calm. This is why I tell you guys, I think we talked about this last week, why I only go through and make changes about 4 times a year. I don't make changes more often than that because I'm going to get emotional. I may look at it on a bad day when I should be looking at it never. Really, in reality, you should not look at it maybe once a year. But that's what's going to make the difference. So stay calm. If you have quality stocks and you know over time they've done well, then let them grow. Let them grow. You don't have to go out there and look at it every day. You looking at the stock market every single day is not going to make the stocks perform any better. If you've got quality, let it go, let it grow. All right, so I'm going to take a few questions. I know that I've been yelling, so I apologize for that. Yeah, do not trade with your emotions. Your emotions, they don't do math. They don't do math at all. All they do is either push you into something you shouldn't do, or the emotions keep you away from investing the way you should. Because I know for a fact, and I've been there are people right now who wanted to invest. There are people right now who took their money out and said that, I wanted to invest, or I took my money out because I saw it drop. There are people that withdrew their money from their 401k, sold everything, and put it in cash right here on March 15th. And they are still sitting in cash today. Still sitting in cash today. And maybe tomorrow they'll look up and say, oh, well, maybe I'll put my money in. No, man, you lost. You lost that money. You can start from the bottom if you want, and that's fine. Hopefully you'll come back up, but everybody who just stays still is up here. The only way you could have gotten out of this is if you sold on this day, which you wouldn't have known. No one knew, right, that this was going to happen. You probably thought it was going to come up here. But again, there's no way you can time it because you had to get out at the right time, get back in at the right time, and hope that you invested in the right thing 100% of the time. That's not going to happen. That's why you stay still. That's why you stay consistent. All right, so questions, and I'll take probably 4 or 5. Ooh, it's a lot. All right, so I'm gonna start at the bottom, work my way up. If I start with 100, I can add to that building shares. Yes, you absolutely can. If you start with $100, you can start with 100, and next month you put in another 100, next month you put another 100, you're gonna build wealth that way. You absolutely can do that. The longer you do it, the more money you're gonna make. For example, and the numbers are a little bit different now, but if you just put in about $83 to be exact, about $80 a month into Costco from 2010 to 2020, you would have had $129,000. Costco, boring. Costco, $80 a month, and you could have had $129,000. So it does not take a lot. But the only way you would have been able to do that is by being consistent. If you weren't consistent, you weren't going to make that. And between 2010 and now, we went through a lot. We went through election. We went through Ebola. It wasn't a smooth ride. But those who are consistent were going to be the ones to build wealth. All right, best index funds. Great question. I cover some of these in my course. I'll be honest with you. A lot of index funds are very, 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 very similar. So the ones that I like, and these are total stock market index funds, it's ITOT or VTI. We've talked about these before. These are both index funds that cover the total stock market. They essentially do almost the same thing. I mean, they track the entire stock market. One is not better than the other. So I wouldn't worry about should I pick the one on the right or the one on the left. It really doesn't matter. If you can get fractional shares, it really doesn't matter what the price is. These are places you probably should be. I think the vast majority of investors, especially if you are new, should own some money in index funds. An index fund owns the entire stock market. So I don't have to pick the best stocks. I don't have to sit here and pick which one of these is going to be best for me. These own them all. Both of these will own the entire stock market. I don't think it makes sense to have both. I don't think you need both. You just need one. In reality, I don't think it makes that much of a difference between which one you choose. All right, so let's see. What are your thoughts about Wells Fargo and Tesla? I need to do more research in Wells Fargo. I don't want to tell you something that's not true. I am not. Now you can make a lot of money in Tesla. I personally am not a fan of Tesla. The only, and this is just me, right? So like, is this for you? This is something you need to decide on your own. Personally, I'm not a fan of Tesla only because I'm not a fan of Elon Musk. You know, he came out 2.5, maybe 3 weeks ago and said the stock was too high. The stock dropped. I don't want my CEO coming out and saying stuff that's losing me money. It is not the first time that he's done it. Now, on the flip side, if you have been investing in Tesla in the last 8, 9, 10 months, maybe actually over the last year or so, you would have made a lot of money. So I think in terms of growth, Tesla is there, but you need to be the type of investor that can ride that can be in a rodeo, because it's going to go up very quickly and it can also drop pretty sharply. So you just got to figure out, is that your fit? Wells Fargo, again, that's not a stock that I follow specifically. I know it's one of Warren Buffett's favorite stocks. You can take that for what it's worth. So that's my opinion on that one. All right. So let's see how many other questions we can take. To that point, reevaluate on dividend date or earnings report date. You can do that. So what I think is better, and this may be the same thing. So when I reevaluate the stocks, so let's say I'm gonna take Wells Fargo for example. Okay, so WFC, which is what I hope. Well, I'll do a stock that I know the stock symbol. Let's say Boeing, right? Boeing stock symbol is BA. So what I would do is I instead of evaluating on a certain dividend date, which you can do, there's actually nothing wrong with that, or on a certain earnings date, I just pick 4 dates out of the year. So I could say, January, April, July, and November. So again, this is every quarter. So you could still do this on the dividend date, but not every stock gets a dividend. So what I would do is say, I'm buying this in, June. In July, I'm going to reevaluate. I'm going to wait. And then back in November, I'm going to come and reevaluate, decide if I still want to keep this stock or if it's doing what I need to do. But this is also that consistency piece. So I could also say, I'm also going to put in 300 at this time, 300 at this time, and just keep that process going. But this is what keeps me from being overly emotional. So going back to this, if we come back here, I would have invested in January, left things alone. I would have actually come back in April and evaluated and noticed like, hey, we're coming back from the coronavirus at this point. I am going to wait. And then I'm going to come back in July, which we're not in July yet. And I would have actually skipped over a lot of what happened here. That is really the benefit of not checking things every day and being calm. This is one way that I personally stay calm, is I'm not going in there and changing. Like, I have no idea how my stocks did today because I ain't looking today. I looked earlier this month. I'm not really going to go in and make any changes until 3 months from now, maybe even 6 months from now. What I like to do is really June and December. Those are my prime times where I really do a lot of analysis. But you really don't have to do that much if you have quality. If you don't have quality, you're picking penny stocks and trashy investments, then you're going to be the one that's on pins and needles. That's not for everybody. Some people can do it, but again, that's not for everybody. All right, so let's see what other questions we have. Do you look at companies' balance sheets? Yes, for most companies. So a balance sheet, for those that don't know, a balance sheet will tell you how much a company has in cash. What do they have in debt? What do they own? Like how much money they actually have. I do tend to look at companies' balance sheets just to give me a sense of how stable they are. So, Apple's got some untold trillions of dollars in cash. That's a benefit to me because I know, as many of you know, when hard times hit, Apple can still run because they still got money. Some companies have a lot of debt. And if I see a company that has way too much debt, then I try to stay away from it because when things happen again, those companies tend to be hurt the most. All right, so I'm going through checking questions. Is it smart to trade versus save for a short-term goal? It really depends. It really depends because I mean, it could go either way. So trading can't. So trading is like, I'm buying Boeing today, and I may sell it within a week, and I'm trying to make, let's say, $500, right? That's fine, but you take on more risk. It really depends on what you're trying to do. Are you trying to increase your income right now? Trading may be the answer for that. If you're trying to save up for Christmas or save up for a vacation, then I would just put my money in a savings account because I know I'm going to absolutely need that in 6 months. I don't know. None of us actually know what's going to happen for the rest of this year. I am optimistic, but realistically, could there be a second wave of COVID? Yes. Could the election be something crazy? Yes. Could any other thing in life happen because it's 2020 that we have no idea about? Yes. So if I know my goal is to go on vacation, pay for something specific, then I'm putting my money in savings. I'm not going to trade that. If I'm trying to increase my income and I already have 6 months or 3 months worth of savings, then maybe I'm going to trade. But trading has more risk. You have to decide what type of risk you want to take. I know as a longer term investor, somebody who's going to hold for several months, at least 6 months is my bare minimum, that I'm going to be okay. But if you're trying to do something within a month, within a week, you're taking more risk, but you may or may not make money there. All right, what can we live without? Copper, trash service, major retailer. If it's a dividend stock, it's a bonus. You can't live without it investing for long term. I agree with most of that. I do. Waste management, WM, was on my list earlier. It had done very well and does well in times like this, as we had mentioned. What about VOO? That is one of those index funds. VOO tracks the S&P 500. VOO is fine. These two, VTI and VOO, are very, very similar. They're not exactly the same because this tracks the S&P 500. This one tracks the overall stock market. Again, you're talking pennies between the difference. VOO is fine. All right. So I think I've answered most of them. Thank you guys. Oh, one other. Carnival Cruise, my thoughts. I'm not a fan of Carnival. Now remember, I cannot be a fan of something you can still make money on it. So I want to throw that out there. This is how I personally approach these. So we know Carnival Cruise had not done well for many, many years up until very recently. And now because of speculation, Carnival Cruise has made you a lot of money overnight. I'm not looking to hit a home run overnight. I'm not somebody who's going to check the market every single day and wonder whether or not my stocks are doing well or not doing well. So again, Carnival Cruise done really well the last 3-4 weeks. If I zoom out, just like I'm zooming out here, over the last 3, 4, 5 years, Carnival Cruise has not done all that well. What we can do right now is look at Carnival and compare it to something. I think they're CCL, because we've talked about it before. And sometimes Yahoo Finance can be a bit of a lag. So look, 15% in a day, like that's big. But again, it's all relative. It's all relative. So let's look at this. Notice this. The last 3 months, we have the S&P 500 versus Carnival Cruise. As you can see, Carnival Cruise has really made an upswing since late May? But again, why risk it when I can just have the S&P 500, which is VOO, or any of the other index funds, and just been fine, right? I would have been fine over the last 3 months. I would not have had an issue. Let's type in a Costco. Same thing. Costco is actually, over the last 3 months, is only down about 1.3%. Again, that's better than the 8. Could Carnival surpass that? Maybe, maybe not. We'll see. If you look at 6 months, you can see now you got Costco on top and you've got Carnival Cruise way at the bottom. Is it coming up? Maybe. But 40% to make up over the last 6 months, not impossible, but still hard to do. So this is why something like Costco's been relatively flat but stable. The overall stock market coming back to a degree. You can kind of see how these compare. All right, so that's it for me today. I will be here tomorrow. I'm here 10 p.m. Eastern, 9 p.m. Central, Monday through Friday. If you want to learn more about how to start investing, how to get things started, what helps you as a beginner, because I want to make sure that you're not going to go in here and do anything crazy. But as the stock market is coming back, this is your perfect opportunity. It would have been an even better opportunity 3 months ago, but we have what we have right now. So go ahead, sign up, buildingbread.com/free class, share the video, click the link, and I will see y'all tomorrow night, and I will see y'all tomorrow during the class. I'll talk to y'all later.